Well, hello everyone, and welcome to today's webinar, Financing Your Business with SPC, How to Get Started and What to Expect. Thank you for attending. My name is Brian Schill, and I'm the Executive Director for the Peters Township Chamber of Commerce. Today's webinar is presented by Mr. Steve Meredith from the Southwestern Pennsylvania Commission. Steve assists borrowers in SPC's 9-county region to access financing backed by the federal and state government for small business startup and expansion projects. Good morning, Steve.
Good morning. Thanks for having me. It's great to be here, and I appreciate the opportunity to speak.
It's great to see you. Long time no see, right?
Yeah, it's been a long time. Yeah, we've known each other for quite a while, but it's been a long time.
Yeah, it sure has. Thank goodness for Zoom.
Yeah,
I love it. So, a little Zoom 101 for everybody. This is being recorded, and it will be available on our YouTube channel for your viewing pleasure. If you do have a question today, we'd ask you to please use the Q&A button rather than the chat. Again, the Q&A button. And with that, Steve, take it away.
All right, thanks very much. I'm going to share my screen here, and hopefully everybody can see what I have here. I'm going to do this. I always have to move the controls out of the way, and what I usually like to do is I usually like to minimize my screen that shows my face, because I'm always distracted by the person that's talking in the middle of in the corner of the room until I realize that it's me that's talking. So I usually like to minimize my face so I don't get distracted by myself. As Brian said, today's presentation is called Financing Your Business with SPC, How to Get Started and What to Expect. And what it's really meant to be is an overview of SPC's business loan products. But before we get into the business finance section of the presentation, I wanted to take a little bit of time to talk to you about what SPC is as an organization. We are a regional planning agency that serves 10 counties of southwestern Pennsylvania. We're also the region's metropolitan planning organization. We're a local development district that has been designated as such by the U.S. Appalachian Regional Commission. And then we're also a core-funded partner and fiscal agent for the Southwestern Pennsylvania Partnership for Regional Economic Performance, or the PREP program. Essentially, all of those acronyms might not mean a whole lot to a lot of people, but from an economic development perspective, SPC is here to help the region's small businesses to start up, grow, and prosper. So where does SPC's loan program come into everything? Well, we help small for-profit businesses to finance startup operations and business expansion costs. We provide low-interest financing for land, building, construction, renovation, or machinery or equipment purchases, including working capital to businesses that are unable to fully finance their own projects. Now, what I like to do with this slide is I always like to expand on the working capital portion of this slide, because from a working capital perspective, it's a little bit different than a lot of people think about working capital from a traditional sense. Our working capital loans are usually tied into a land, building, construction, renovation, or machinery equipment purchase. The example that I like to use is, let's say for the sake of argument, you own a print shop and you print stationery and business cards and wedding invitations and all manner of paper products. And then one day you decide that you want to move into screen printing t-shirts and hats and sweatshirts and all that kind of stuff. Well, you're going to need a piece of equipment to facilitate that new product line. You can take an SPC loan to purchase that piece of equipment, and then you can take a working capital loan to train your staff on how to use that piece of equipment. So training expenses for that piece of equipment. Similarly, let's say you are a manufacturer, and let's say you manufacture wristwatches, and you've been so successful that from running your business out of your apartment that you have so much inventory in your apartment that you have nowhere to sit anymore, right? You've got boxes and boxes piled up on couches, and you're bursting at the seams. So you need to purchase a building to hold your inventory. Well, you can take an SPC loan to purchase the building, and then you can take a working capital loan from SPC to essentially purchase the inventory to fill that that warehouse with your inventory. So that's a little bit how the working capital works. It's related to a land building, construction, renovation, or machinery or equipment purchase. So moving right along. One of the reasons that people take loans with SPC is because our interest rates are extremely competitive. Right now, our interest rates are between 0% and 2.75%, fixed both at the time of approval and throughout the life of the loan. Now, from a term perspective, for land or building loans, we can offer up to a 15-year term. For machinery or equipment purchases, we can offer a 7 to 10-year term. And for working capital loans, we can offer a 1 to 3 year term. So if you think about it, if you're taking a land or building loan, you can lock in right now at a rate for a business expansion loan for a building of up to 15 years at 1% interest for the length of that loan. So for 15 years, you're going to have that 1% rate locked in. So that's why it's pretty attractive. Now, one note that I will say, this slide actually blends together with the next slide quite well, because the term of our loan is actually somewhat dependent on the term of a private bank loan. That is because our loan program requires matching financing from the private sector or through equity, typically a 50% match. Typically, the way that our loans are structured is that we will ask the borrower, that's a difficult word to say, the borrower to bring 10% business equity to the deal in cash, or through proof that you have purchased items that are related to the project, okay? Now, the remaining 90% is then going to be split down the middle between SPC and a private bank. And essentially what you're going to end up with is 2 separate loans for the same amount of money, one from SPC and one from the private bank. The nice thing is you get that really competitive 1% interest rate on SPC's portion of the loan. Okay. Now, from a collateral perspective, we do not provide unsecured loans, so we will need collateral. Typically, the asset that is being financed is what is offered as the collateral to secure the loan. So if you're buying a building, we're going to ask you to take a mortgage on that building. If you're buying a piece of equipment, we're going to take place a lien on that piece of equipment. But in addition to that collateral, we're also going to need personal and corporate guarantees. The personal guarantees are going to be from anybody that has a 20% or larger stake of ownership in the company. And then finally, the last program requirement that we have is an economic development component, which basically states that you must create or retain jobs associated with your project, okay? So the economic development component states that you have to either retain 1 job for every $35,000 borrowed, or you have to create 1 job for every $50,000 borrowed. I'll repeat that again. You have to retain 1 job for every $35,000 borrowed, or you have to create 1 job for every $50,000 borrowed. Now, we do have some flexibility on this requirement. So let's say your business is in its infancy, and you're just focused on keeping the employees that you have right now. Well, then in that case, we would help you focus on the job retention requirement. But if you are in a phase of the business cycle where you want to expand your business and hire more people, then we're going to ask you to focus on the job creation requirement. And typically with our borrowers, it's a combination of both. They'll come to me and they'll say, I plan to retain X number of employees, and I plan to create X number of employees. And it's usually a combination of both. What I will say is this: when you are telling SPC how many jobs you plan to retain or create, be conservative in your estimates, okay? The reason why I ask you to do that is because if you tell me that you're going to create 7 new jobs with your loan, and then you only end up creating 5 new jobs, there is a requirement on our end to raise your interest rate. So we want to help you lock that interest rate in for as long as possible, but we can only do that if you're accurate in your job creation and retention metrics. So what I tell my borrowers is Always be conservative. What you want to do is underestimate the number of jobs that you will create or retain, so that by the end of the first 3 years of the loan's term, you will have created or retained more jobs than you have initially said. Essentially, what you're going to do is you're going to underpromise so that you can over-deliver on those requirements. So underpromise so that you can over-deliver. Okay. Moving right along, application requirements. SPC provides the loan application, and we do ask that you complete all applicable sections, okay? But in addition to the paperwork that we ask you to fill out, there are some additional documentation requirements that we ask. We're going to need 3 years worth of company financial statements, past 3 years worth of business and personal federal tax returns. The personal federal tax returns are going to be needed from any of the guarantors. So any of those people that have 20% or larger stake in the business guaranteeing the loan. We'll need commitment letters from all other funding sources. These days, you know, what that amounts to is whenever we're working with the bank that is providing the matching financing, they'll provide us with an intercreditor agreement that basically says, here are our terms for our portion of the deal, and you know, here are SPC's terms for their portion of the deal. So we'll need that sort of intercreditor agreement from the private bank that's providing the match. You're also going to need need to show sufficient cash flow to meet the debt service. That's an underwriting term. Our underwriter is going to take a look at your company financial statements to find out, and the tax returns to find out if you have that cash flow to meet the debt service. And then finally, in some cases, we're going to ask for key person life insurance. The key person life insurance is really only in the event that maybe the key person that owns the business might be getting up there in years. Maybe they're 75, 80 years old, but we would only collect on that key person life insurance policy in the event of that key person's death. Okay, and again, that's really only going to be in the event that the owner is particularly senior in age. Now, one quick other final note. I have notes here so that I don't forget to say everything that I need to say, but I don't have to put it all up on the slide. If you have not been in business for 3 years, that's okay. We can lend to startups, but what we will ask you for is a copy of your business plan and 3 years worth of your company's financial projections. Okay, so if you don't have your business plan, if you don't have company financial projections, the first thing that I'm going to tell you to do is contact your local small business development center to get that process rolling. Okay, moving right along. Loan application process. Before we determine whether or not SPC is the right lender for you, we need to have a pre-application discussion with the borrower. So I'm going to talk to the borrower about the project, and then if we determine that we are the right lender for you, what I will do is I will rope in a private lender to provide the matching financing. Now, there are 2 different ways that we could do this. If you have a business bank that you have a really good relationship with, what I would say is take their temperature on their desire to partner with us on the project. Sometimes banks don't want to partner with us on projects because they don't want to share collateral with us, and that's okay. We have banks that we work with on a regular basis. So if your business bank says, nah, we don't want to share collateral with them, don't worry. You can always come back to me and I can introduce you to one of the banks that we work with, and we can try to make the deal work out that way. Now, after we have that 3-way discussion with the borrower and the bank that's providing the matching financing, I will send you an application, and then I will work with you as much or as little as possible to complete that application. I never like to insult my borrower's intelligence. If you want to go and you want to fill out the application yourself, it's fairly self-explanatory, but if you do have questions on the application, please feel free to give me a call or shoot me an email. I'm happy to work with you as much as possible. After we get the application back and all of the supplemental paperwork that I talked about in the last slide, I'll send your loan application package down to our underwriter, who will underwrite the loan, and he will pull your credit. He may reach out to you to ask some clarifying questions that he needs some more information on. His name is Todd Stranko. He's very good at what he does, and he's very friendly. So, it's a common occurrence. You know, a lot of times what I will do is I will send a loan package down to them, and he'll shoot them an email and say, hey, I got your loan package. I'm doing the underwriting. I had a question about XYZ. Very common occurrence, nothing to be afraid of. After our loan analyst underwrites the loan and pulls the credit, will present the loan to the appropriate review committees for approval. And then after the loan has been approved, the closing can occur with SPC's business loan servicer. Essentially, what she will do, her name is Sarah Francis, she will send your loan application package to our attorney, who will prep the closing documents, and they'll file all of the UCCs on the collaterals. The UCC on collateral is just the paperwork that we need to file with the state to let them know that is being offered as collateral to secure SPC's loan. And then after that, she'll work with you to not only schedule the closing, but she will work with you throughout the repayment process. So if for some reason, if maybe 5 years down the line, you need to move to interest-only payments for a period of 3 months, you would talk to Sarah about how to make that request go through. And essentially, we would ask our loan review committee to approve it. And once that's approved, you could get that interest-only payment for a period of time. But Sarah would be the main point of contact if you need to move forward in that direction. Okay. We do have a few fees that are applicable with our loans. We have an application fee that is equivalent to 1% of the SPC loan amount, okay? So it's not 1% of the total project cost, it's just 1% of the loan amount that SPC is providing. And that is due at the time that you submit your application. We also have an annual servicing fee that is equivalent to half of 1% of the outstanding principal. And that's due on the anniversary of your loan closing. So as you think about it, if you think about it, as you pay down your loan, that annual servicing fee is also going to go down. And once you get your loan balance down below $50,000, that annual servicing fee becomes a flat $250 fee due annually, again, on the anniversary of your loan closing. And then I also like to highlight the fact that we have no prepayment penalty, okay? You can reach out to us at any time and say, hey, I had a couple of good quarters, or I had a good 6 months. I'd like to pay off this loan. And we will get you a payoff figure, and we will send that to you so that you can pay off the loan all in one lump sum. Certainly, we prefer if you stretch the loan repayment out to the fullest extent that it can. But like I said, we don't have any prepayment penalty. And I can tell you an anecdote just from this last fall. We had a guy come to us and said, hey, I had a really good 6 months despite COVID. He had a 7-year loan with us that he paid off in a couple of weeks. So that's definitely an option. And then finally, all legal fees are the responsibility of the borrower. And that is for the preparation of closing documents. Like I said, the UCC filings, pretty standard routine stuff. But I want to make sure that you know the legal fees are the responsibility of the borrower. And with that, ladies and gentlemen, that concludes my overview of SPC's loan program. This is my contact information. What I will tell you right now is I am in the office right now 2 days a week. As you can see, this is my home office. So obviously you can't reach me at the extension that I have up there today. But on Mondays and Tuesdays, if you want to give me a buzz, I'm in the office. If it's Wednesday, Thursday, or Friday, and you want to get a hold of me, the best way to get a hold of me is via email. I also urge you to connect with me on LinkedIn. I love facilitating conversation that way and meeting new small business owners that way as well. So with that, I will check the Q&A box. If anybody has any questions, feel free to pull them there, and we'll answer them in the order that they're received. And if you don't mind, I'm going to stop sharing my screen so that we can I can see that. Well, actually, no. I'm going to keep sharing my screen so that you have my contact information up there as long as possible, if you don't mind.
Thanks, Steve. I got a couple things. It's very interesting. I mean, that especially the loans are tied to job retention or creation. I thought that was very interesting because this is the first time I'm hearing about the SPC type of loans. So in other words, for everyone who is either on right now or viewing this in the future on our YouTube channel. So for example, if you had a $100,000 project, so it looks like 10,000 of that would be through equity, through the borrower, and then you would split the $90,000 between SPC and a lender. So for example purposes, since we are so happy to have Clearview represented today, so 45,000 would be through SPC, and 45,000 would be borrowed basically from Clearview Federal Credit Union. And then the SPC portion, for example, on a construction expansion project would be the 1% over 15 years, for example. And
right,
then,
as long as Clearview could match that. Now, if Clearview,
that was my big question.
Yeah, I'm glad you brought that up because I noticed about 2 slides after the slide where I usually say that, I forgot to say it. So the term of an SPC loan can never be longer than the term of the bank that is providing the matching financing. So let's say, for the sake of argument, Brian, your example, let's say Clearview could only offer 12 years on a building loan. We would match their 12-year term in that sense.
Okay. And then, so in the percentage rate from the borrower, I mean, from the institution like Clearview,
we don't have any control over that. Clearview would set their own rate. But
exactly.
The nice thing is, and the reason why it's advantageous to the borrower, is rather than the borrower going all the way to Clearview Federal Credit Union and getting the whole amount financed at that interest rate. Let's say, for the sake of argument, Clearview Federal Credit Union's interest rate was higher than SPC's. Well, in this case, essentially, the borrower could get half the cost financed at 1%, and then the other half of the cost would be financed at Clearview Federal Credit Union's rate, rather than the whole cost of the project being financed at the higher rate from Clearview Federal Credit Union. And I apologize, I'm not picking on anybody from any bank, but that's why it's advantageous to the borrower. And the reason why it's advantageous to the bank is because by taking on half the loan, we're essentially minimizing the risk profile from the banker's perspective. We're helping them minimize the risk that they're taking on any specific borrower.
Sounds good. I just wanted to clarify because I wasn't sure about that. So
I'm glad you asked, because I forgot to say it.
And the other thing I thought was interesting too is the piece where you talked about if you haven't been in business for 3 years, because unfortunately, Steve, we found out through the pandemic that a lot of the businesses in the chamber, for example, several of them started during the pandemic, so that they obviously weren't eligible for a lot of the programs, the federal programs, especially the PPP and things like that. So it's good to know that there are options for those new businesses, as long as they have obviously their business plan and and those projections. And the other thing I really liked was how you brought in SBDC with that, because we work with both SBDCs at Duquesne and Pitt with this chamber, and they have been they've been incredible resources.
They really are, and the
business.
University of Pittsburgh. I mean, not to single out Duquesne, because Duquesne and Pitt are excellent, but Pitt recently won a national award for how good they have been with helping their clients. Duquesne has been a staple of the community. Their SBDC has been a staple of the community for decades. And it's interesting, if you'll allow me, I'm going to do a shameless plug for an event that's coming up on Monday. The RSVP deadline is today, so you can still RSVP for it. But we're going to do an event next Monday called Removing Barriers to Borrowing, and where I'm going to talk about, I'm presenting I'm presenting on how borrowers can remove common barriers to borrowing specifically from economic development organizations. And we talk a little bit about how important it is to use the SBDCs when crafting your business plan, when forming your projections. Most of my day is spent, all of my day is spent talking to small businesses, right? But 9 out of 10 of those small businesses that I talk to in a day's time are either pre-ventures, startups, or they've been in business for maybe 2 to 3 years. You know, it's very rare that I talk to a business where they've said, oh, I've been in business since 1975. Or if they have been in business since 1975, what I'm talking to is a new business owner that wants to take that business over. Because if you've been in business since 1975, chances are the original owners or the owners that have been passed down to are ready to retire. So a new person is thinking about taking that business over. And when a new person is taking that business over, it doesn't matter that the business has existed since 1975. Because the new business owner is taking it over, we're going to need that new business owner is going to need to consult an SPDC for a business plan and financial projections because it's under new management. So that removing barriers to borrowing presentation is coming up next Monday. It's going to be May 17th at 1 p.m. Like I said, I'm presenting. If you want to RSVP for that, if you want to take advantage of that, what you're going to have to do is you're going to have to RSVP to Linda Duffy. The email address is lduffy, just like it sounds, LDUFFY at spcregion.org. And what I will do, if we have a chat box, I'll put that email address in the chat box here. All right. And that's to RSVP for next week's event. All right. Well, if we don't have any further questions, I do want to thank you, Brian, again for having me on today. And if anybody wants to talk to me offline, feel free to shoot me an email or connect with me on LinkedIn. I'm always happy to facilitate that and talk to you about any facet of SPC's loan program. All right, Brian. Well, thank you very much, and thank you all. I will leave you to it, and have a great morning and the rest of your day, and great afternoon as well. You're muted, Brian.
Thank you.
I was wondering if you were trying to talk to me.
Yeah, absolutely. No, I just wanted to say that thanks. Reminder: this webinar will be posted on your YouTube channel, on our YouTube channel, and on our social media outlets, and in next week's news you can use. So, if you're looking for additional training or events, or you yourself would like to present at some time, give us a call, 724-941-6345. Or you can go to our website, www.ptcoc.org. Thanks again, Steve. I appreciate it. Thanks to all of you for attending, and stay well and have a great day.